Hey guys, Matt here. Welcome back to this week's portfolio update. We are looking really good. This has been a fantastic January. I think we're at the end of the month, so I think I can jinx it. The only money I put into this was at the very beginning of the month because I'm moving. You see the boxes. I can't start putting money in until after I'm done. So all this, portfolio going up. This is all the market. This was all the market performance, and like I said, very strong week. Verizon had a pretty decent earnings. Tesla had pretty decent earnings. They beat on EPS. They came in flat on revenue. AT&T had really solid earnings, and we are back to earlier this week. I was actually in a positive. We went down a little bit, but that's fine. So Meta has earnings coming up. We'll see how they do. The stock has been going up pretty well, which kind of scares me. We'll see what happens when, Meta reports things, because I don't know if ad revenue is quite back or not. Yeah, we'll have to see about that. Intel is the only earnings this week that did not do well, that historically did not do well. And we're going to talk about that in today's video. Intel's earnings were absolutely god awful. And this will be the part of the video where I go over a lot of the numbers and stuff like that. And I will go over some of it, but I'm sure you've seen the earnings by now. It is so universally bad that, you can, you probably already agree with me. EPS expected 20 cents, reported 10 cents. Revenue, 14.49 billion, 14.04 billion reported. Not good. If you look at the previous earnings, yeah, they did really well in Q3, but they also missed in Q2, and that's not they don't have the best track record of all time. I bought this stock back in 2020, and I know, we're supposed to be long-term investors and stuff like that, but it's 2023 now. And just taking a look at some of the financials, revenue by the quarter, down 32%. Gross margin, now they're 39.2%. That is absolutely awful. Operating margin down 32.4 points. Net income down 114%. Now they're technically in the negative. It is absolutely awful. By the full year, none of this is looking good as well. Down 20% by the year. Operating margin down 20.9 points. Absolutely awful. Absolutely ugly. If you want to look at their business units, client computing down 36%. Data center down 33%. There is no part of this earnings that you can look at and say wow, this was good. Now, I guess if you scrutinize long enough, it mentions it here. It is on track in achieving its goals. And I did read that it laid the blame for a lot of the things that are going wrong with it. A lot of the things that are going wrong is on the macros. They mentioned that a lot of manufacturers and stuff, like Microsoft reported it, they just aren't ordering chips because they have a lot of their own inventory, Microsoft them, that they need to work through. So PC demand has been absolutely crushed, according to Intel. Now, it's not just their, reported numbers that are bad, it's also their outlook. For this quarter, so the first quarter of 2023, they're expecting revenues between 10.5 and 11.5 billion. That is already down. That is down even further from an abysmal 14 billion for the last quarter. That is horrible. And gross margins, they're supposed to get even worse. They're supposed to drop to 34.1%. The long-term target gross margin of Intel is supposed to be 60%. And now they're talking 34.1%. This is god-awful. Now, one saving grace, according to Intel, as far as the macros, the weak PC demand is supposed to last until the first half of the year. And the second half, from what I read from different news sources, the second half of this year is when the demand is supposed to pick back up. Now, that also depends on Intel's ability to actually execute, which is something that, I would question given their past performance. Now, this is a portfolio video, so I want to focus this video on what I'm doing with Intel. So, according to their earnings, what I read in the news and all that, I haven't listened to the earnings call, but according to everything I read from Intel so far in the media, they are blaming this on the macroeconomic environment. They are blaming us on weak PC demand and all that stuff. That's fair. Well, what I'm going to do is I'm going to wait until next week. AMD has earnings on the 31st. So and AMD and Intel are in the same market. If what Intel says is true and the macros are affecting everyone, then that means AMD's earnings should be rough. So if AMD reports terrible earnings on the 31st, fair enough. It is due to the macros. We're going to keep holding on Intel. We might dollar cost average. That is fair game. We're going to hold. If AMD reports good numbers, that means that despite macroeconomic decisions, they continue to execute well, because we know that AMD's been eating Intel's lunch for the past few years. AMD is absolutely destroying Intel in market share, and that is not a secret. So if AMD reports good earnings, I may have to rethink my Intel investment. Like, maybe this was not a good idea. Now, what am I going to do about it? I don't know. Will I sell at a loss? Will I hold on? I don't know what I'm going to do, but we're gonna cross that bridge when we get to it. So we're going to wait and see what AMD does, and then we'll act from there. Now, I know Intel has a lot of new plans that are supposed to come into fruition over the next few years with the new plants and the new entry into the manufacturing space, the re-entry into the new manufacturing space. And that's all well and good. We're supposed to be long-term investors or whatnot. But I'm also concerned about Intel's ability to actually execute on a lot of that stuff. And that's been my concern for some time. I mean, it's been 3 years, and Intel isn't really showing a whole lot of ability to rise past that. So anyways, I'm curious as to what you guys think about Intel, what their earnings are, and what their future is. But anyways, take care, have a great day, and eat your vegetables.